Todd? Okay.
Got it.
Hi, everybody. Dale Pinkert here, and joined with Tom Basso.
Basso.
See, I
It's
watched your
Italiano.
intro. I watched your intro, Tom, and I wasn't going to mispronounce your last name. You made it a point. And, you know, it's great to meet you, first of all, Tom. First time we've had a chance to meet and talk to each other.
Yeah.
And I appreciate your, giving nature to be here and share your time and edify our community here at TradeGATEHub. And, I'd like to start out talking about your journey. I know that you're used to manage funds, and you left that, and now you have a service where you help people hedge your portfolios. But I don't know, let's get in a time machine together, buddy, and go back to what motivated you, and perhaps what was your first gig in the business?
Well, what motivated me actually goes back to chemical engineering days, where if you remember the 70s, and I think you have enough white hair as you may.
I do.
The recessions and the economic booms came about every 4 years. It was like a cycle. And chemical engineers largely supply the chemical industry and the oil industries, the energy industries, because you got to be able to use chemical engineering techniques to do all that. And what would happen with every one of these booms and busts, chemical engineers would get a lot of jobs, and then they get laid off 4 years later. So I saw that, and I talked to some of the old guys at my company when I first got my first chemical engineering gig. And they said that, one way to help yourself is to actually have some savings and invest them and try to build up your war chest so that you have the ability to, take off and go get a new job some other city, maybe.
Save for a rainy day.
Yeah, it seemed like a sensible thing to do. Most people should be doing that.
Don't do it.
Yeah, they don't do it. And so I did that. And the guys at the table I used to hang out with at lunch were all stock gurus. They subscribing to all these newsletters back in those days. And there'd be a healthy discussion about different techniques and how can you beat Wall Street? They know so much, they're way ahead of you. And I started realizing that opinions and data were two different things. If you read Heard on the Street in the Wall Street Journal,
yes,
a lot of that stuff was opinions. And as an engineer, I'm used to dealing with data. And so I would start reading with a whole different mindset that this is a piece of information. The Dow Jones hit X. That is a fact. It will go higher. That's an opinion. Or it will not be able to sustain that level. That's an opinion. And so I started realizing if I just stuck to data and to informing my own opinion, basically, that I got rid of all this clutter that Wall Street sends your way. And I was able to just make my own opinions, make my own indicators, make my own decisions on whether I want to go long, short, get into futures or not. All the opinions about futures, for instance, being so risky. I've been trading it 45 years. It's not, risk is, I can make treasury bills risky if you take enough margin into it.
Yeah,
or T-bills or T-bonds.
The only thing we can manage is risk, right, Tom?
Yeah, risk and leverage, and understanding the details and the data behind what you're doing is so important in trading. And I think so many people just, grab to the latest opinion, the Musk says this or so-and-so says that, and off we go. And a lot of money can be made, and it kind of addicts people to the gambling aspects of what we do. And I think, as the late, great Dr. Tharp would say, about 30% of the people on Wall Street doing trading are certifiable for Gamblers Anonymous. And I don't think he's too far off. I think there's quite a lot of people that treat this as something they can do from home instead of going to the casino.
Well, they think that they could read a book and trade, and you can't read a book and do brain surgery. I don't know about you, Tom, but I've interviewed well over 1,000 people over the years, and I always ask them how long it took them to make a breakthrough to where they could trade fairly consistently and pull money out of the market? And the average answer is about 4 years. Like what it would take to get a college degree, or
Exactly right.
to go from being an apprentice to a journeyman in a trade. But I want to ask you, when I knew a prospect in my days prospecting for accounts, engineers were great leads. They gravitated towards the markets. They loved the markets, the technical aspect of it. What is it about engineers that, they're natural investors and researchers and traders?
I don't know. In my mind, the way I looked at it was the markets are kind of like an instrumentation control loop, if that's a weird way of saying it. You've got markets that go up, down, and sideways. And what ends up happening is you have in instruments, if you're controlling a distillation column, for instance, or something, you have a noise band. You don't want to take action when nothing significant is happening. So you set the gain on the instrument and the sensitivity of the instrument in simple terms, so that it ignores all of this, well, like the sideways in the markets example.
The noise.
The noise. It's just noise. The market. I mean, everybody ought to watch like a 5-minute bar and look at all the noise, just to train themselves in the fact that a lot of it is just noise. And then when you start stepping back and you start seeing that, wow, we had 3 weeks of noise here, but then right here, it broke out of that noise and it took a nice run. And that's where the money is made.
You waited for your signals.
Yeah. And conversely, to the downside, that's where risk is coming into the market. And if you're long, you're going to get hammered. So you could throw on a hedge or time out of a position. If you're in an ETF, maybe you sell it, whatever. I mean, there's lots of ways of mitigating risk. You can buy put options. You can at least sell calls or do something, to mitigate some risk. But
yeah, I do want to talk about, from what I've gathered, checking out your website, it's really a service that you provide for people. But, I want to go back to one thing that when you and I first talked, or when we scheduled this, that you made a major life decision. And, we're all hearing about, I know we're in the Phoenix, Scottsdale area, and prices of homes, it's national news in that area, were up 33% in the last 12 months. And you actually made a decision to sell your home in Scottsdale. You have another place to be. And
up in the
to me,
mountains.
to me, that's a statement on a view that you have about what's going to happen with what the Fed is doing. So, how did you explain this life decision to your wife? I know she's a realtor.
Actually, she explained it to me.
She explained it to you? Oh, that's you scored some points here. You're going to play this for her later. I know that. So
yeah, she came to me. I mean, this beautiful place we live in with this gorgeous view, it's really hard for me to want to go through anything that distracts me from what I'm doing, because I enjoy what I'm doing so much. And I love this place. The kitchen's great. I love cooking in it. The back deck has got a gorgeous view that I think I have on my Facebook page or something. But she came to me and said, Tom, this is insane. And she started showing me some of the price per square footages. And she took me around and showed me some of what's going on. And what really iced it for me was we took a trip to Nashville to visit my stepson, who is opening the new Four Seasons there. It's going to be the tallest structure in downtown Nashville. And it's going to open this summer. And so we went to just check out the new city and see if we could find them a place to live. And the people that were selling houses in Nashville, it was insane. There was I think we had 12 offers on the first one that we lost, and the last one ended up going for 100,000 over asking. And I'm looking at the prices per square footage, and I'm looking at the prices of lumber, which I do trade,
Yeah.
and
Okay.
all sorts of the interest rate futures, which I'm now short. And all of these things, I'm going, this is a mathematical disaster, wait, in the wings. So she said, came back and started looking at it and said, Tom, do you realize we could get X for our
Yeah.
place here?
Yeah.
And I said, okay, yeah, but then we got to buy something else. She said, no, we don't. We can move to our mountain home and watch the disaster happen. And then we can go in and buy whatever we want and throw a few 100,000 in it to make it what we want. And she said, our lifestyle has changed. And this interview is an exact example of that. 7 years ago, 4 years ago, I started the website, enjoytheride.world, which you
Yeah.
have up on the screen.
I like that
And,
tagline.
and I've now got 41,000 something Twitter followers. I'm more well known now than when I used to be a money manager and I was in Market Wizards. And so really strange change of life, but
Were you in
I
the
could
first
really
book,
use it.
Tom?
I
Because
could,
I've
what's that?
interviewed Jack. I've interviewed Jack a few times. You were in
Yeah,
the original Market Wizards book.
I was in the new Market Wizards.
A new Market Wizards.
I'm not
Okay.
I'm not that old.
All right.
I'm
I didn't
pretty
say you
old. These
were
are gray
Peter
hairs.
Brandt, Tom. I didn't say you were Peter. Peter's in the Unknown Wizards book. So, wow, congratulations on the new Market Wizard book.
Well, but
And I
the
have
point
that.
is, a lot, what's happened is I need a sound studio. I need a place where I can have a quiet
Yeah.
and do interviews and stuff, because I get interviewed about once a week, it seems lately. And what ends up happening is to not have that in this situation, we need just an extra room in our house. So we're going out and looking. We're not seeing anything that's reasonable, and we're just going to wait. We're going to live in the mountains. We always live in the mountains in the summer anyway to get out of the heat. So no big loss for us. And hopefully somebody loves the place they just bought. We're moving out in about 5 days. So when I get done with this interview, I'll be packing boxes. And yeah, we'll see what happens. And Dale is back on.
I'm back on. Thank you, Tom. All right. So I have an internet connection here that's not stable, like the market. So let me ask you this. I understand the interest rate picture that you're talking about, and understand, it's never a profit till you take it. Does your wife think that part of the disaster, and, everyone says there won't be a housing crash because of this housing stock shortage, is it going to take something like Blackstone and all the hedge funds that bought up a ton of inventory during the last crash, turned them into yielding investments, for them to have to liquidate their inventory for it to turn into a bear market?
It could. That would certainly trigger it as they get lukewarm towards the values going down. That could hurt it. And then the other thing is, just as we started the whole thing with, people do not save enough money. And as the realtor would say, if you're going to put a loan on a place, which now, if you come into Scottsdale Home and you put a bid up and you put a bid on it, and it's going to be contingent on a loan being approved,
yes,
you will not get the deal. It's got to be a cash only offer. Getting a lot of people from California coming in, having sold their house in California and escaping California, is the way I put it. And coming to Arizona, which is a little bit more open, and I would call it normal. And they're bidding prices up and they're paying cash. And so what ends up happening is normal people just shouldn't even bother wasting their time. Just about. There's multiple offers. We had multiple offers on our deal. We picked the best one. It was all cash. It was over asking price. They bought everything in the house that we didn't want to take with us, which it just saves a whole bunch of hassle. Anything less than $2,500, in the inspection, they'll take care of. They don't want us to hassle with it. They made it as accommodating of a bid as they could have possibly done it. So we said, geez, this is easy. And I think when that starts shifting, it already is starting to shift, we think. My wife has got a whole bunch of economic indicators on the multiple listing service that she can track. And she's already starting to see some of the softening. There's some places that are now on the market for 3 weeks instead of 2 days. We're starting to see a couple price reductions on places that we visited. I personally think last time in 2008, it went down about 50% in the Phoenix area because the market here is so hot. Here in Las Vegas, the Southwest, a lot of people moving here from various places. But I think this time there are some economic arguments to say that it might not fall 50%, but I sure could see 25 or 30.
That would only be giving back last year's gains.
Yeah.
And they'd still be expensive, but yeah. So interesting. So let's get to the markets now.
All right.
Because I saw the video, and you were just putting out you got on Twitter and you put out a couple of things that you were doing and seeing, and just word of mouth led to you having a lot of followers now, and it's probably what a great time for you here as well. We've really had kind of a one-way market to where people started to say, why am I hedging? I'm just wasting money. It's cutting into my performance because I buy these puts and they expire worthless. And I would say, well, you buy homeowners insurance and you don't root for a fire.
There you go.
All right. But
now, exact line.
Now it's two ways, right? I mean, it's more of a two-way, and there's been carnage in the markets. I
have a good story on that. Yesterday, I got my teeth cleaned, normal routine dental appointment. I get done and I'm paying for the dental appointment. And this nice lady dentist that I've been going to for years comes by and said, Tom, I'm really worried about my stock portfolio. Why is that? He said, well, I put in my annual contribution to my pension plan last Friday, and it was a fairly good chunk of money. Today, this morning, that's all gone. I'm back to where I was Friday when I put the money in. And I'm looking at her saying, well, what do you want me to do about it? I'm a retired money manager. And so I said, you got to have a plan. Who's your broker? And I won't tell who the broker
went
is.
through that with
major
my
house,
sister.
Everybody would know the name.
Yeah.
And largely stock and bond place. And I said, you got to have a plan. To go into a bad period without a plan is a disaster. And that's what you're doing. And your broker doesn't have a plan either, obviously. And I don't know what to tell you. I have a plan. I'm near new equity highs right now, and I'm enjoying the ride. And I'm sorry. I don't have any great suggestions for you.
Yeah,
and, I'm going to get that over the next month or two. I'm going to do a lot of those.
It's tough to give people advice when it's a post-mortem.
Yeah.
I know that and you don't know how many people back in like 2000 and 2007 would come to me and while the market was starting to decline and say to me, well, Dale, I don't want to take profits because I'll have tax consequences. Instead of being grateful that they had gains and paid the taxes, they ended up with losses. So that's not a good contingency for staying in a position.
You want to concentrate on making money, and as far as not liking to pay your taxes, that's the voting. You got to get into your voting and who your representatives are in Congress and all the, how they run the economy, which lately isn't too great. And, taxes are what taxes are. And I concentrate on making money, and then I worry about my taxes. Taxes are a second and lower priority on the whole scheme of things.
Okay, so I noticed on that big down day we had the day before yesterday, where S&P's challenged at 4,100 level. It's a pretty important technical level that I see. And then we had that bounce, and there was selling into it. But you took a hedge on that close, on that negative close, because who knew how we were going to open the next day, right? So tell us what you're doing when you're hedging. Are you shorting futures? And is that the most efficient way to hedge your portfolio with S&P futures?
Yeah, what I use S&P futures for my portfolio because my portfolio is an ETF based portfolio that covers lots of different sectors. That's the lion's share of my long only exposure to the stock market, and therefore to stock market risk. The S&P correlates reasonably well with my portfolio. I also know of other people who use, like if they have a tech stock portfolio, maybe you hedge using the NASDAQ futures. If you have small stocks, maybe the Russell is a better fit.
Right.
Play with it. The only reason I put the hedge page on enjoytheride.world, my website, was that so many people asked me about it. I got tired of writing back in emails explaining it all. So I thought, well, why don't I just explain it one time and just put a link to my page and they can go read it themselves. That's an example of what I do for me. I encourage everybody to just go out and use whatever they can that fits their situation. If you're at a stock brokerage firm that doesn't have futures capability, it's going to be really hard to hedge with futures. But futures have a tax advantage in that when you try to short something like an ETF, it's all short-term capital gains if you're successful. In the case of futures, because of a very old kind of compromise that IRS did with the straddle traders back in the old days in the 70s, they did a 60-40 blend. So 60% of your gains are long-term capital gains, 40% are short-term. So for me, that makes a lot of sense. Higher tax bracket, can do the 60-40 deal. But over time
well, you don't have decay like you do when you're using puts for protection.
It's a lot easier. To me, I can also put a stop in. I'm a retired guy. I want to go out and play golf or be on an interview with you or whatever. I don't want to sit there in front of a screen looking at 5-minute bars going up and down. That's pretty boring. I've been trading for like 50 years. I don't really need to sit here in front of a computer and do that anymore. And so to suit my lifestyle, putting in stops and walking away from it all is great. And they just get executed very efficiently. If you look at the volume on the S&P futures, I need not worry about my few little contracts that I've got in there. They're going to get gobbled up by big institutions as quick as I put them in. So,
and people have the mini to use. They don't have to do bigs. And I think they even went to a micro.
Yes, so you can use the micro if you want to really go small. So there's no excuse. People could learn about this stuff. I mean, there's probably, I'm guessing 10 or 20, 10, 15 at least micro contracts. You got micro copper, you got micro gas, you got micro crude oil. There's all sorts of micros that are coming in, and that gives people an entry level place to learn about futures and be able to deal with it. And as they get bigger, they can go up to the big contracts.
It's like the old Mid-America days.
Exactly.
Did you ever spend any time on the trading floor, or you learned how to trade off the floor and you didn't want to take an elbow to the chops and have out trades? Huh?
I was a tall guy. My voice was probably not powerful enough.
Well, Basso, that's the bass in the Italian choir.
A bass voice. I do sing in a choir, and I do have a bass voice. It turns out, though, some of these guys that I know from the floor days, their voices are shot, they're raspy, they've just destroyed themselves shouting and screaming. And that's not me. I'm more mild-mannered, laid back, computer nerd. I never had a desire to go down on the floor.
Okay.
Except as a tourist. I went down once as a tourist.
My first trip to the CME, I grew up in Chicago,
Yeah.
and a friend invited me down to the floor,
Yeah.
and I took the L. I got off I thought I was at the Merc, and I'm walking around, where's the trading floor? And someone said, there is no trading floor here. You're at the merchandise mart, where the wholesalers had their outlets, right?
Uh-huh.
So I had to get back on the train and go to the Merc, and the belly pit was a big pit there at the time.
Yeah.
Do you have a view on the markets here, Tom? Do you think that, are you agnostic?
I'm kind of, I try to be agnostic all the time. If there's two parts of me, the trader, Tom, and the citizen of the world, Tom.
Yeah.
And, the trader, Tom, just looks at it and says, okay, Friday, in my indicators, they broke out to the downside. So I put the hedges on.
Right.
That's all the thought I gave it. I
Okay.
didn't do any more analysis or anything than that. Just my stops were hit. I'm short the hedges. I'm getting stopped out of most of my ETFs. I'm down to about 30% long exposure, and that's what I'm hedging. I'm not hedging the entire amount I trade in the ETFs. I'm trading just the 30% that's still long. And as that reduces, I'll peel off some of my hedges to match them.
Okay. Ever,
But the citizen of the world, Tom,
yeah.
man, let's see, you got war going on that doesn't seem to ever stop. You got interest rates generally higher, inflation higher, and not showing much signs of slowing down. You got food prices, like I trade
Food
wheat,
security.
corn, soybeans. They're all, in uptrends, and I'm long. And you got the precious metals dollar is strong. A lot of, the Japanese yen has gotten killed. The euro, I'm short euro, British pound, Swiss francs. I'm short gold, silver, platinum. Energy prices are hovering. Gas prices, I trade unleaded gas, RBOB gas on New York.
What don't you trade? I think it'd be a
I'm
shorter.
up to right now, I'm trading about 26 different commodity markets.
Wow.
I'm trading about 20 sector funds and trading some momentum ETFs that just come up randomly. I do some credit option spreads on stock indices. I trade two different micro cryptocurrencies, or cryptos. Yeah.
What does Citizen Tom think of cryptos?
Citizen Tom likes the alternative to central bank driven money because they've done such a poor job of managing the currencies around the world, not just the United States.
Yeah.
And there's been this tendency to, they use the
Debase.
term race to the bottom. I kind of see that there. It's like, oh, you're going to destroy your currency by flooding a bunch of money out there. We can show you one better, and let's make ours go down even more so that we have a cheap currency against your currency, and you can buy our stuff, and therefore our economy is spurred on. And oh my God, what madness. It is insane. And interest rates are between interest rates, inflation, housing prices, food prices, energy prices. That's not a recipe for success here. I just, people are not going to be able to afford, normal people will not be able to afford their life. I
Could
don't
it
know how
have
that
been,
all works out.
I know remember Marty Zweig and
Oh yeah.
Don't Fight the Fed.
Yeah.
And really, it was that easy that you
Yeah.
could have just been long until they changed course,
Yeah.
and then you could have been out or short when they
Yeah.
did.
Yeah.
And, all the way through that cycle, I'm, trying to figure out when they might change or have to change. And they've made a couple course adjustments, but it's amazing to me because I'm always looking for what is under the surface, that it was that obvious. All you had to do was buy the dip when the punch bowl was being filled up. And then, Paul was, he telegraphed this. No one should be surprised. And the market was melting internally before he announced it, right?
Yeah, it was.
What's going to take?
Stock market's been starting to get weak for all of this year. It hasn't been just something last Friday, but I try not to make a lot of moves. I don't like to trade. Like I said, I don't want to sit here in front of a machine. So
Yeah.
I have stops, and I probably do 1 or 2 trades in hedging a year. On my other side, I mean, there's every day I probably trade something, it seems, because I trade like 40 or 50 different things, and I've got stops on all these items. So the likelihood that I'll have something hit in any one day is a fairly good probability. But you end up with the stock market starting to cave in and starting to show greater signs. And Citizen Tom would say, the stocks look kind of sick right now. I'm not sure I'd want to be too enthusiastic. I'd like to try to find opportunities. I like to attack risk. So in the case of risk to the downside, I look at that as an opportunity. What could I do to make money during a down move? Try to make money this year. If the market's down all year, I don't want to sit here in cash doing nothing.
So will you buy bearish ETFs and to trade the downside in the market?
I've been shorts NASDAQ futures for like 4 months now.
Okay. All right. So you're one of the most attached guys, and it's not easy to get to where you were. How long did it take you to really become detached where you could have all of this stuff on and go play a round of golf, Tom? It's not an easy paradigm.
No, it's it's been an interesting life. I would say it was 4 years for me to get to roughly break even in my futures trading. It was a little bit quicker than that in stock trading, but I was blessed with some early good moves in the market that just ended up making some money. To try to take those 4 years and get to the point where I was profitable then, and then to have the serenity that Jack labeled me with in the new Market Wizards, Mr. Serenity, I'd say that was probably perhaps another 4 or 5 years to have that level of comfort with
belief in your orders.
Yeah. Belief in the fact that this is noise, this is up, and that's down. So when you get out of the bottom side of the noise, you're in a downtrend. You go out of the top side of the noise, you're in an uptrend. And in between, you ignore what's going on. Instrumentation control loop. And once I figured that, my mindset became so much easier to deal with. And you know where you are, you know what you have to do, and you just do it. Execute flawlessly, as I say. Just have a plan, execute it.
What a great model you are for people, just to hear that it's possible to be detached and have complete confidence in what you're doing, that you can have a life and be a trader at the same time. So I'll tell you what, Tom, Mr. Serenity, I sure enjoyed taking a ride with you today and being able to talk to you. It's inspiring for traders to hear about you and to see a happy guy and not some masochist that's been at it for decades. And really,
there
it
are
was
so
really
many
a blast.
masochists in the market. It's amazing. Once I retired and became a trader for myself, this smile went on my face, and it hasn't left since. I've had a lot of fun in retirement, so I recommend it.
All right, we'll wrap it on that recommendation. As soon as you can, retire. Don't let it happen by slumping over on your keyboard. Right, buddy?
All right, Dale.
All
it was
right.
fun talking to you.
You too, Tom.
So
everyone, I hope you enjoyed Tom. You know where to follow him. It's his name, at Tom_Basso.
No,
and
at Basso_Tom.
Oh, that's right. It's reverse. So I appreciate that. And your website again, Tom?
Enjoytheride.world instead of .com. .com was taken.
Okay. All right. Well, Tom, really, I enjoyed it. I feel relaxed myself right now. It's contagious. All right. Thank you very much, Tom, for your time. I appreciate it.
Right.
And we all do. It was a good time. All right, everyone, that's a wrap. Hope you enjoyed it. This guy's the real thing in the new Wizards. And look, Michael Covell writes about him. So you don't have to bite your fingernails to be in this business. Here's an example. Adios, Tom.
Bye.